WTF? Like, what happened to stocks today? Because they went down more, went down even more into the close. Normally, gap downs are for buying, but not today. Gap downs were for selling, sell it more, sell it more, sell it more. So something appears to be happening today because the blood is pretty obvious. If we look at the last 4 hours, it also continued into the close here, notably for mega cap. So here's the headline. Read it if you want to, right? Certain country attacks another country amid a clash 1 year in. That's right, 1 year in. But 1 year in, it looks like we're on the edge of all out W. That's not a word I want to say. It does not make me feel good. And the thing I would tell you is that the quote we like on this channel is when there's missiles in the sky, it's time to buy. But please remember, that is assuming that this one's not the big one. This is what the big one would be. I think that's the reason why the market's a little bit more anxious today. We're still hearing greed, so investors aren't scared yet, but things are definitely not as hunky-dory as they were before. Here's what I was expecting into the close today. We've been talking about this failing pattern over and over. Fail breakout, fail breakdown. I was expecting a failed breakdown today. We did get pretty close. The selling did look like it was accelerating, but we were looking for 568.1. We're basically there in post-market or in after hours. Here's the reasons why I'm using a little bit of a clickbaity video today. You're watching for about 90 seconds so far. Fantastic. Why? Well, because if this is a bigger one, if this is the reason we're going to go lower, like on the weekend, we talked about this $8 trillion reason. Remember, I warned you about this. It's not like I know everything, but war, Fed, U.S. elections, all could overshadow corporate earnings, which kick off on Friday, right? A tricky or spooky earnings season is going to be starting on Friday. So this could just be the start, right? I'm not saying we're going to go lower, but remember this talk we talked about too? This is BW or Babcock. It's doubled in the last month. It's up in the last 5 days, 20%. Today, it's up 14%. This stock does not care. So there are always stocks that don't care when the market's going down. And if you can watch until the end, I do have 2 hot tips for you in terms of ideas. All right. So you've been watching for 2 minutes or thinking of watching for longer. Here's the reasons why you should. If we look at these numbers right here, it's very simple. We hit resistance, and we'll even make it simpler for you here. Why? Because I think people they like simple stories. All right, here we go. Here's the S&P for 2024. Here's where we were going into the open of October. Bullish for the year. But until we form a higher high, we're stuck, right? We're at a yellow light until we get above 575. Into the weekend, we were basically there, 573, 574, I forget. But now we're not. So now that we've gone down 10 points and we're hovering here at 565, that's a pivot. The bulls are either going to show up and we go higher, or this could accelerate and it goes into an all-out something. And maybe it's this, maybe it's something else, right? There's a couple of reasons why stocks could go down. It could be the election that happens in like roughly a month, right? It's just under a month away, November 5th. It's the 7th today. Okay. So make it really simple for me because I'm just hearing you talk and I'm getting confused. Are you ready for today or a 1% drop to happen 5 more times? 1% decline happened today, roughly, right? NASDAQ's down by 1%. S&P's down by roughly 0.9, almost 1%. Why do I say that? Because if we look here to where support is truly, we go look at our close from before all the way down, it's roughly 6%. So 6 times 1% declines, that's 6%. If you're like, oh, today wasn't happy. Well, what if that happens 5 more times? Are you going to get wussy? Are you going to be scared? If you are, you should probably manage your account now because the bears need a lot more damage before they have any progress. They need to go through. They haven't even done number 1. 540 would be number 1. Then they got to close below. Then they got to print another low. Then they got to go even lower. Because what the bears fail to understand, and I know some bears are watching now, I'm sorry, don't mean to hurt your feelings. But sometimes during a candle period, in this case a month, the chart breaks. That's a lower low. But what happens? Failed break. That's why we got to wait for the print of the low, and then we got to close below. It's not enough just to print a low. We got to close below to get a true trend change. All right, so I think that's probably it. We've tapped this area before too. Let's look at a weekly. Why? Well, we're tapping that bid, right? Tap that bid, tap that bid. The more we tap the bid, the more it might want to go down. However, here's the bullish twist. All right, now you're saying we could go down or we could go up or maybe sideways. That's correct. That's what stocks can do. They can go up, down, or sideways. This beach ball area, again, pink is a pivot. That means S&P is now broken out. Again, trying to hold it down. Boop. The beach ball came above water, and now it's currently above the pink line. So hard slam today, but still technically higher. Here's what I want to see into tomorrow and notably into the rest of the week. I want to see the higher low hold. Why? I've been talking about this. I said the weekly candle doesn't look great to me. I said it on Wednesday, Thursday. They fixed it into Friday, but I don't like what I see here. We only got one higher low, one higher high, even though we do have 4 hollow candles. And we are expecting good data this week. All right. So in a boot, right, about 5 minutes, that's the intro. If you guys don't mind, please considering to smash a thumbs up or subscribing to the channel. I would greatly, greatly appreciate that. All right, so we have to really, and like this stock here, man, incredible, right? The system, or the algo called this one. Wow, what a stud. I don't have enough left. Clearly, I trimmed way too much. But geez, all right, I was calling out a 1-1. That's roughly where we are now. 1-1 to 2-4. That's a double, right? Double. There we go. So I got 2 more for you at the end. I better make sure I pull it up too to make sure I actually deliver on what I promised I would here. But on the weekend, we talked about this. The stock market is overdue for a correction or a 10% drop. Normally, it takes 172 years for an average decline of 10%. It's now been 288 days for us. We got to like 9.5, not quite to 10. So that's what they're talking about here. What's important to note, like we talked about on the weekend too, if we decline by 10%, that would get us to roughly the 5-year average, and roughly a 15% decline would get us to 18. So if we repeat today 5 more times or go down to strong support, don't be a wuss. You're like, oh my God, we're on strong support. It's time to sell. I'm joking about it, but I want you to think about this. How many times have you actually sold on support? Probably more times than you like to admit. How do I know? Because I did. Me, the host, the guy telling you not to do it. I've done it. Done it way too many times. So don't do it now. This is support until it isn't. And remember, the more we tap an area, when eventually it doesn't hold, boop, it just washes out. Buyers are gone. They've been exhausted. All right, pushing forward. So stocks are starting to go down, and it's not because of what stocks are doing. It's because of something else. It might be the big one a year later. And we got more than one front we're fighting on right now. It appears like Asia is settling down, but over there's no settling down. They're escalating. $8 trillion rally is going to get tested with earnings that kick off on Friday. And the bar has been getting lowered. So lower bar and not delivering, it's going to be a double whammy, right? It's going to be a punch right to the kisser. So S&P and Russell, they normally go higher into a rate cut, but not everything's created equal. We talked about this. A lot of bears have PTSD about the majority of declines in a bear market happen after the first pivot. So that's what they're really focused on. They're like, oh my God, well, negative 30, 40, 50, 60. Oh man, I'm scared. Yeah, keyword here being bear market. We're not in a bear market. We're literally at all-time highs. So I'm not sure this applies right now. But again, it's a pretty big coincidence that people are getting scared. Once in a lifetime Wall Street rally raises soft landing stakes. Yes, that's the soft landing, right? The soft landing, and now we've popped above water. All right, stop the show. Show me the economic data. All right, here we go. Let's look at it. Could be up by more than 2.4% into September. Well, that's interesting because the same company, again, like the beach ball underwater, I showed you that a few times now, where we come here, right? Tap that ask again, tap it a third time, tap, and then they got above. So they held it underwater, or the pink line, until they were not able to anymore. Now it's above, and they're just going to keep grinding back. That's what I would expect right here at 565. If not, FCK. Oh my God, stock market crash. We're getting some bumps. That's right. Maybe even some lumps and bumps. So Goldman Sachs, again, who was calling for this before, the beach ball, is now looking for 6,000 by the end of the year, but they're looking for some bumps. Is it going to be a couple of bumps? Is it going to be a bunny hill, or is it going to be a black diamond? Man, I don't know. I am tactically negative into quarter end, but targeting SPY at 6,000 with FOMO rally. All right. And they gave us an update here. Now they're not just bullish into the end of the year. They're bullish for the next 12 months. What's the number? 6,300. That seems correct. Between 6,000 and 6,300. That is the SPY target for the next 6 to 12 months. Perfect. Let's go. Let's go. So what's really important here is that we do not fall back below 65. That's our previous top right here. So for fear and greed, pop flag pop. That's how we sustained the rally and went higher. That's the beginning of the year. That's the big move we had. So if it's not a fizzle like we had here, high, lower, high, we have formed the higher high. Now we have to hold it. We're hovering here at 70 for fear and greed. Stocks did really well for the third quarter. So what are they going to do now? Is it going to be a big decline? Well, this one's important too. What's it actually doing? 1.14. Let's see what the number is. 1.15. All right. Oh yeah, I forgot to go through this, right? Sorry, just been a bit one of those days. Videos coming out later, like, there's just a lot going on. Dollars up. Look at this. Whoa. Oh, that looks like a strong chart. Oh my goodness. VIX 18%. It's back above 20. Remember, we talked about below 20, calm, cool, collected. That's the teens. We're now above 20, above 30. Things are getting a little bit more anxious. Above that, people are worried. So the worry is starting. There's a W in the making. Is it going to fizzle? Is it going to be a lower high? I don't know. But this 10-year note is also getting pretty spicy. That's a big move. We talked about the white soldiers in here. And the 2-year note is even more accentuated, right? More obvious. Be like here, wow, whoa, that's a precursor to a crash. Yeah, it is. Most of the time, dollar up, bonds up, stonks up, something's wrong. Yep. There we go. So until we get above 575 this month, be prepared for us to go as low as 540. That's strong support. And for QQQ, that's 449. All right. Quickly getting through the rest here. On average, we declined by 3%. I just told you could be a double at 6. We're a third of the way there, right? We're a third down to 3% for an average decline into October. All right. And then on average, we're higher 75 to 100% of the time, 3, 6, 12 months out. Same thing here. 80% chance we're going to be higher by 6 or 10%, or a 83% chance we're going to be higher by 8 or 10%. So you probably want to buy the dip. Don't be laughing, right? Don't be someone who's going to get caught on the wrong side here. Maybe it is 1995, right? If we're going to get a dip, be happy to buy it. I talked about this at 5:30. We're like 40 points higher now, 30 points higher, whatever. Man, it's been big. We could be in for an everything rally. Yeah. The baton's got to get passed off. That's why I'm watching where the higher lows are now going to get set. So now at 11 minutes, thank you so much for tuning in. I will see you guys at 9:15 a.m. tomorrow if you want to tune in. Thanks so much, and I'll see you on the next one.